Hi there, Nicholas Campion here from First Formations, and welcome to another episode of Whiteboard Thursday, where we provide advice on a wide range of business and company matters. If you find this video useful and you enjoy it, please give us a like and share it with your friends and colleagues. But for now, let's get started. Today I want to discuss the subject of converting from an LLP or a limited liability partnership to a limited company and the benefits of doing so. Converting from LLP to a limited company offers significant benefits to certain businesses. Indeed, an increasing number of firms in the professional services sector, and this includes people like lawyers, accountants, architects, and medical practitioners, are moving away from the traditionally preferred partnership structure towards the limited company model. Before we take a look at the benefits of converting to a limited company, let's first take a look at the evolution of partnership structures in the UK. Now, many businesses that traditionally operated as general partnerships, and some of which did for hundreds of years, decided to adopt the LLP structure following the introduction of the Limited Liability Partnership Act 2000, which combines some of the benefits of incorporation with the important aspects of the partnership model. Several of the major accountancy practices and a significant number of law firms took that leap to limited liability partnership status. The most obvious reason to convert from a general partnership to an LLP is to benefit from the protection of limited liability. The traditional partnership structure does not provide any protection from bad business debt and other liabilities. Members of an LLP, on the other hand, they are safeguarded from business liabilities in the same way as company shareholders. Furthermore, a limited liability partnership is a separate legal entity. And this means that an LLP can trade or purchase property and obtain finance in its own name. The legal personality makes it also easier to structure the business and gain investment. However, some of the features of the traditional partnership are still retained within the LLP model, including individual taxation of members and greater flexibility regarding the internal organisation of the business. Nowadays, many professional businesses operating as LPs are taking things a step further and converting to limited companies to enjoy the advantages this structure has to offer. So, just what are the benefits of converting from an LLP to a limited company? Well, without doubt, the driving force behind converting from an LLP to a limited company is taxation, and in particular, a company's ability to retain profits in the business and pay the company owners dividends. So let's look at that in more detail. Limited companies can choose to retain profits in the business rather than pay money out via salaries or dividends. Any money ploughed back into the business is only subject to corporation tax, which has a lower rate of income tax. LLPs cannot retain surplus income, so all money has to be paid out to the members, which will incur income tax on all of those earnings. Unlike LLP members who need to pay the full rate of income tax on their earnings, company owners can choose to pay themselves via dividends. And the highest rate of tax on dividends is lower than the highest band of income tax. This means it is often more tax efficient to draw a combination of dividends and a salary, taking into account the tax-free allowances and so forth. However, taxation is only one of the advantages of a limited company that it has over an LLP structure. So let's take a look at some of the other reasons why you might wish to convert that LLP into a limited company. The first of which is sole ownership. Companies can be owned by just one person. For example, someone can take over a business, whereas LLPs always need to maintain a minimum of 2 members, or partners as they're called. If at any point there are less than 2 members, for instance, if one of the partners is away, the LLP will be automatically reverted to a sole trader status and the protection of limited liability will be lost. Then we have structural simplicity. Limited companies are generally set up and governed in line with the model articles of association. Meanwhile, LLPs are required to create their own LLP agreements, and these may need to be amended to accommodate changes to operational matters, which can be cumbersome. Next, we have limited liability. Although LLPs and limited companies both enjoy limited liability, there are potentially more risks for members of an LLP if it becomes insolvent. You see, there are these so-called clawback provisions that were introduced by the addition of Section 214A of the Limited Liability Partnerships Regulations 2001, which means that the members can be pursued for debts of the LLP in certain instances. Continuing on, we have expansion. Takeovers and acquisitions are generally easier and more straightforward for limited companies in comparison to LLPs. In general terms, you cannot buy an LLP in the same way that you can acquire a limited company, which would be done through purchasing the shares. The acquisition of an LLP usually involves purchasing the goodwill and the assets of the partnership, which often involves further complications such as transferring the existing clients to the purchasing entity. Flexibility is the seventh overall point. Although this is not a reason to convert an LLP to a limited company, but it should be noted that limited companies can be just as flexible in its ownership structure as an LLP, and this is predominantly due to their ability to introduce what are called multiple share classes. Next up, we have investment. It is possible to purchase shares in a company without becoming a director, which often makes it more attractive for outside investors. In contrast, investors in an LLP will generally become members, which potentially entails more responsibility. It is normally more straightforward to invest and sell shares in a limited company in comparison to investing in an LLP. And then finally, stock market listing. Since LLPs do not have shares, they are unable to obtain external investment by listing on a stock exchange. Private limited companies are also unable to exchange their shares publicly, but it is possible to convert that private company into a public company, also known as a PLC. So those are some of the key benefits of converting an LLP to a limited company. Now let's take a quick look at how to actually do it. There is no formal procedure that enables an LLP to convert to a limited company, as the structures are so fundamentally different. Instead, it involves a process of transferring the business from the old entity to the new one. There are a few steps to this, which we'll go over briefly now. But before starting, as a sort of a pre-conversion step, you may want to consider changing your LLP name if you are seeking to use the same name for your new limited company. It doesn't really matter what you choose in terms of your name here. A placeholder name is good enough. Doing this frees up the name for registration with your new company. So, number one, register a limited company at Companies House. This can be done either directly or through an agent like First Formations. Number two, transfer any assets and liabilities from the LLP to the limited company. If there are contracts in which your LLP is party to, these will need to be novated across as well. Number three, the individual LLP members should enter into director service agreements with the new limited company. And then finally, number four, the LLP, the original LLP, should be dissolved at Companies House. And just as a little important side note, it is worth remembering that taxes may be payable with respect to the transfer of the assets from the LLP to the limited company. And there you have it. Today, we have covered the evolution of the partnership structure in the UK, why so many businesses are choosing to convert from an LLP to a limited company, and finally, how to make the change in 4 simple steps. If you have any questions, please leave them in the comments section below. And in the meantime, be sure to subscribe to our channel to get more advice on limited companies, reporting requirements, and tax obligations. We're always happy to hear from you, and we cannot wait to help. Until next time, cheerio.